And I think we've printed more plastic cards than most of the banks right now. So it's really moving. It's kind of gone viral here. We're expanding across Southeast Asia. And essentially, we're unbundling what a bank does to offer lower cost, better product, and essentially do what a bank does, but do it better.
Umang?
Hi, I'm Umang Rustagi. I'm the co-founder and CEO of FinAccel. We started FinAccel about 3.5 years ago with a vision to build mobile-first financial products that are low-cost, fast, and easily accessible, built around the amazing customer UX. We started our journey with our flagship product called Credivo, which is a digital credit card for millennials to shop and borrow online. With Credivo, we are actually solving the problem for the young millennials who are actually applying to the banks and not able to get a credit card because they don't have either a credit history or the banks don't find it cost-effective to basically underwrite them. We are able to do that with our proprietary verification and credit scoring technology, where we are able to enable access of credit for these individuals. And also, we work with e-commerce platform who we integrate as a payment method and allow these customers to use their credit limit to buy now, pay later.
Thank you, Umang. Anna?
Hi, my name is Anna Gong. I'm the CEO and founder of Perx Technologies, a leading mobile marketing automation SaaS platform that focuses on customer engagement and loyalty, helping large enterprises solve some of their big challenges around engaging and personalizing engagement. We actually cross industry support a lot of these initiatives for banking, telcos. Actually, if you have My Digi app, we are the back-end powering all of the rewards management with the My Digi app. So you can see that cashless, all the fulfillment, everything is powered by us.
Yep, that's great. Thank you very much, everybody. So let's start with the idea of being cashless, yeah, because it gives a different definition when you talk about it in a country like China, for example, and it is different as well in Southeast Asia in general. So, Dan, maybe you can share what do you think about what's cashless from a big bank perspective, and what's the cost and benefit from your perspective?
Yeah, it's one of those questions where there's no right or wrong answer, so I'll give you my view anyway. So I suppose the literal definition is it's some kind of digital money and not physical notes and coins or checks. But I think that misses the point somewhat, which is, for me, it's really more about the move towards what I would call invisible payments. So, we've heard from so many great startups and technology companies over the last 2 days, and many of them, at the end of the day, are providing a service which needs a payment leg. And that payment leg has to be really, frankly, invisible. The buyer of the service wants the service. They don't want to have the hassle of the individual payment. On the way here, I was in the airport and had to pop in and buy something, and tried to pay with Apple Pay, but unfortunately they didn't accept Apple Pay. So I got my credit card out and paid by credit card. And they scanned it not only in the till, but in the point-of-sale machine. They then printed out 2 receipts. They got me to sign both of the receipts, and then they physically swiped my card onto one of the receipts. That whole thing took about 6 or 7 minutes. Frankly, I wish I'd paid by a note. So to me, cashless is not about a card. It's about taking the friction out of the payment and making sure it's as invisible as possible.
Great. Let me then go very specific about. I'm not that. Sorry. Let's talk about. Chris, when we talk about your business model as a company that is seen to be challenging the incumbents, yeah, I'm not talking about challenging HSBC, but what do you think would be required for a company like you to be able to provide similar level of satisfying kind of a financial services we're using FinTech, especially in terms of towards achieving, having one of the goals being cashless for the society. Measuring it from a traditional bank perspective, how BigPay is going to be able to do that?
So I think on cashless, I think when our children look at us and then we have bits of metal and bits of paper, it will be, I mean, I already think it's fairly anachronistic. I think that like what everyone is doing is essentially a ledger, loyalty is a ledger, lending is a ledger, payments is a ledger. It's a credit and debit of information, right, with high veracity and making sure that you know what's on either side of it. And that's essentially all of finance. And so I guess cashless or using technology is an efficiency saving that should be passed on to the end user. So yeah, I think it's a force for good, and I think it's definitely well along that train. I think it will leapfrog other developed markets in Europe and North America because there's less infrastructure here, but everyone is online. Going to your point about underbanked, I mean, I think everyone is underbanked in Southeast Asia. There are quite a lot of unbanked as well. So I think if you build an app, you should always target the hardest to reach demographic, because if you build for underbanked, they still use Instagram, they still use Facebook, they still use all of these things. So actually you need to build a product that is in line with kind of the best companies in the world.
Sure. All right. And for Umang, you focus on the micro segment, especially the millennials in Indonesia, yeah? So do you think that what you are doing is able to finance the entire ecosystem of the future? Because now what you're doing is seen as an alternative financing. So is it enough to be able to sustain the need for the future financing needs, especially for the millennials?
So I think each of the different payment types have a place in the society, right? So there is cash, there is digital payments or wallets, there is also credit cards or alternate financing, right? So I think what we are really solving for is a fundamental need about our customers. There are two basically fundamental needs that we are actually solving for. One is that, as I mentioned before, access to credit. So just to take an example of Indonesia, there are about 260 million people, 70 to 80 million people in the middle class, but only 7 to 8 million credit card holders. So less than 10% of the eligible population have access to credit. And I think there is a huge and immense opportunity to actually able to do that. It's not that 90% of these individuals are not credit worthy. It's just that the traditional way of underwriting, where banks look at physical KYC or credit bureau information, just doesn't exist in this part of the world and in a lot of emerging markets. Our whole approach is that how we can actually solve the problem of no credit bureau information by supplementing that with digital information. Now, in terms of smartphone usage, that's exploding. In terms of digital data usage, that's exploding. So what we are really doing is finding innovative ways and innovative information sources to actually do exactly what a bank is doing, but in a more digital and a consumer-friendly manner. So I think there is definitely a huge opportunity and a scope to do that. And I think there will be more and more of these needs that we will be able to solve. I think we started with the problem of providing microcredit, but the credit information and the data that we are able to assess for these customers, we can actually offer further more forms of financing, be it business financing for the proprietors, or as they move ahead in life, providing them auto loan, car loan, health loan. I think microcredit is a starting point. It is for these customers to actually establish a credit history and then build on top of that.
Fantastic. So Anna, you're in the business of capturing data and serving the company, like you mentioned just now, MyDG. Yeah. So how do you then try to capture the offline data? People who are not well connected to the current ecosystem that we have, and then how is that going to be able to? I mean, capturing is one thing, but also to change the mindset of these people to be able to be part of the ecosystem.
I think in the old days, even currently, most enterprises have not been able to fulfill the discovery part and engage customers in a real-time, predictive manner. The best players in the market today have done so well, Amazon, Google, and so forth, but it's still very online focused. They are also trying to fulfill the offline, predictive and recommendations and personalizations. And so when we look at offline data, we actually collect so much data, but we don't collect the PII data, personal personal identifiable information. And so these are the private information like name, email addresses, phone numbers, and so forth. But we understand your buying behavior. We understand where you're geolocation-wise. We understand what products you actually consume, how you abandon, when you abandon the app or the shopping cart. Whatever it is about the behavior, where you're at, we can even do so much more to hijack customers to certain merchants if we need to, or even hover around high-density customers where you have low ecosystem footprint. So there's so many things that we can do, but is the market ready? And so the usage of data is actually very unsophisticated currently. There's a lot of data science talk, AI talk in large organizations. They have hundreds of data scientists and data engineers, but the manipulation and creating these algorithms is actually one thing, and automating that is another, which AWS and Google GCP is doing really well at. Now, how do you now discover that and use that at the last mile? That's what Google's trying to solve as well. They don't have the last mile advantage. So this is the fundamental that we're actually solving. How do we engage customers? Lead with engagement. Loyalty is dead.
Fantastic. So it is interesting that you mentioned about the data, and I think what crossed my mind was there's certain risks about it in terms of, I mean, we know there's this issue with how Facebook managing risk. So then I would want to ask Dan, when we talk about FinTech, what would be the maybe top concern as far as implementing FinTech from a bank perspective? And then I'll probably go to Chris in terms of the FinTech challenger, in terms of what are the risks that you're looking at as well. But we start with Dan first.
Sure. So as the banker, I get the risk question. Thank you. So I think with any technology, so technology generally solves a lot of risks, but it creates new ones as well. And as obviously talked about data, data is clearly one of those. You know, there are moral, ethical, legal, regulatory risks around the data itself. And as we get more involved in using artificial intelligence and so forth, there's also model risks around bias, unmanaged bias in the way AI tools badly used could cause us problems. And by definition, any model isn't always correct, so there's error risk as well. So there's certainly a lot of risks around data. They're manageable, but they exist. I think the biggest one is obviously cyber. So as more things move into the digital ecosphere, we've got to make sure that we invest very carefully in making sure that the whole system is protected, because that would be cataclysmic if there was a cyber issue. So cyber is something that's very much front of mind for ourselves and many other banks and many other players in the system. I think the final one I would highlight is fraud and anti-money laundering. So on the one hand, moving to digital from physical reduces a lot of those risks. You know, clearly counterfeit notes is the most obvious example of fraud in the old way. But we've seen, you know, a lot of socially engineered digital fraud, and so something we're very focused on is making sure that we protect our customers and ourselves from being exposed to things like socially engineered fraud and other new forms of bad actors getting into the system.
Chris, for your thoughts from FinTech players?
Our whole business and all financial services, I believe, is risk. From the moment you onboard KYC, you need to know who the person is. You then need to know what they're doing with their payments, like money, transaction monitoring, AML checks. And then when you want to do a remittance, you need to know exactly who I am, who the other person is. And when you make a loan, you need to know as much data as possible to make a loan. So risk is an element of data. And the more data you have, the better decisions you can make, and essentially run a more profitable business, which is better for the end user and the customer. So everything is about risk, and then managing your risk better using data. And that's actually where FinTech will probably win in the long run, because they're putting data and alternative data ahead of where traditional banks pull their information. And yeah, it's about risk management.
Fantastic. So looking at country like Indonesia, Umang, very, very high-level question. Do you think that they are ready to be cashless?
I think yes, and I think every emerging market is, because I think the issue is not about demand. The demand is there. The young millennials, they are very aspirational. They want access to credit, access of buying things, and it's a general phenomena, right? I think the issue was more about supply. The banks were not able to fulfill that demand that was generated, and that's what was happening in the past, because the traditional finance industry relies on traditional data.
Sure.
And if there is no traditional data, they just don't lend because they think the risk is too high for them to actually earn a return. What we are really doing is actually using a lot of data to price that risk. We are able to, like for every customer, for example, when they download our app and go through the onboarding process, we are collecting 4,000 to 5,000 data points about these customers. That is actually helping us to do identity verification or KYC, address verification, income verification, and credit scoring. All of the things that a bank would do to actually give a loan, to know whether I am who I am, what is my willingness to pay, and what is my ability to pay. What we are really doing is using that alternate digital data to actually answer these three fundamental questions.
Okay.
So if we are able to do that, and I think the market is really ready because the demand is there, it's about creating that supply.
All right. Fantastic. So we got 2 minutes. Let's round it up. Anna, I mean, in terms of focusing on being cashless, what's your wish in terms of what could be done in terms of enabling this as far as the market you're in?
I think it's inevitable. It's just time. What we do today is everything. What Chris just said, FinTech will lead the way. It's consumer-driven society. And so when you see things happening, it's all to create and prevent fraudulent activities and tax evasion. So a lot of this cashless society is going to be government-driven down. So it's inevitable. It's coming. It's the Borg. Just embrace it.
Dan, your thoughts?
So I agree with what Christopher said at the beginning, which is technology's done absolute wonders for financial inclusion. The benefits of going cashless are actually very, very clear. However, I think I'll be the one person on the panel saying, actually, I think that the tail will be a long tail. This will take a long time. And whilst technology has been very good for financial inclusion, I was looking at the stats earlier. So in Malaysia, according to Statista, only just under 60% of adults across the country own a smartphone so far. So, and that's really the vehicle into most of these technologies today. So I think we ought to be careful on the other side that moving too quickly to cashless isn't about financial exclusion. And I think there will be a long period of time where physical and digital run together. And certainly as a bank, that's something we're very focused on, is making sure that we can support our clients, whichever manner they choose to act in.
Thanks, Dan. Chris?
Yeah, I mean, I think it's beyond inevitable. I think the cost of cash on a personal level, queuing up, paying in checks in a bank, or at a corporate level, the cost of handling money, or a sovereign level in terms of managing your monetary and fiscal policies as well, is, I mean, it's in doubt. But I mean, it makes no sense for it not to be fully digital. And I think the biggest challenge is actually regulators seeing that if you move faster towards, I think, accepting it, that essentially you improve GDP at all levels of society. And I think the faster you are to adopt it, the more growth there is in the economy.
Umang, you got the last word.
Yeah. So I think the wish list is very clear. I think we need to build an ecosystem where the regulators, the distribution partners, the data providers, as well as even banks and financial institutions have to work together, because I think every stakeholder, it's in the best interest of every stakeholder to actually build that ecosystem and go cashless.
Thank you. Thank you, excellent panelists. Give a big round of applause to them.
Thank you.
And we end this session. Thank you very much.